Today, Galaxy Digital loses hundreds of millions of dollars during crypto's bear market. Celsius backtracks on rehiring its former CFO. And the U.S. Treasury Department just banned Americans from using mixing service Tornado Cash. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital assets are starting the week in the green. By noon Eastern, Bitcoin jumped to $24,000. Ether, meanwhile, traded near $1,800, and Chainlink traded at $8. Okay, on to the top stories. First, crypto financial services company Galaxy Digital just reported earnings, and the company took a beating. Galaxy took a $554 million loss thanks to falling crypto prices. Compare that to a year ago when the company lost $183 million. It's not all bad news, though. The company's mining business helped offset some of those losses, and CEO Mike Novogratz said the firm's exposure to Three Arrows Capital was small. Next, Binance CEO Changpeng Zhao caused a panic today for users of Indian crypto exchange WazirX. CZ, as he's also known, tweeted that users of that platform should transfer their funds over to Binance and that WazirX could be shut down by Binance at any time. Zhao was responding to claims from WazirX's founder that it was owned by Binance. CZ tweeted that Binance provides wallet services for the exchange and that it could shut down WazirX, but it won't because that would hurt users. Last up, in the latest turmoil over at Celsius, the crypto lender withdrew a motion to rehire its former chief financial officer, Rod Bolger, at $92,000 a month. Celsius had planned to bring Bolger back as an advisor to lead the company through its restructuring, but it was unclear whether Bolger would have received his base salary of $62,000 a month on top of that $92,000 consulting fee. The decision to withdraw the motion came 3 days after CNBC reported on that request to rehire Bolger. CNBC also reached out to Celsius for comment, but didn't immediately hear back. And for our main story today, we're following some breaking news regarding Tornado Cash. The U.S. Treasury Department just banned all Americans from using the Mixer service, which lets users obfuscate their crypto transactions. Tornado had been instrumental in a handful of high-profile hacks this year, notably out of North Korea. I asked Redbord of TRM Labs whether this meant the U.S. was getting more serious about crypto's use to skirt sanctions. Ari, how important is that decision by the U.S. Treasury Department to sanction Tornado Cash today?
It's really important, and it's a really big deal. Kate, I would put this sort of in the category of the most important crypto-related sanctions that ever came out of the U.S. Treasury Department. And it's really just the size and scale of Tornado Cash. Essentially, Tornado Cash was sanctioned. And just to back up a little bit, Tornado Cash is what they call sort of a mixing service. And it's a way for users to anonymize transactions. Basically, they pool the funds and then send them out sort of the other side to ensure that you sort of lose track or in order to obfuscate the funds. Imagine a mixer and you have a pretty decent sense of sort of what's happening here. But essentially, look, these types of mixing services, Tornado Cash in particular, has been a go-to tool to obfuscate transactions by cyber criminals, particularly North Korea. And North Korea has essentially used Tornado Cash in every major crypto heist, every major hack, really over the last year or so. And with this designation, Treasury is saying, look, enough. We cannot allow cryptocurrency mixers or any other businesses to facilitate money laundering, particularly money laundering from a nation state actor that's going to use the funds for weapons proliferation and other types of destabilizing activity.
Are there any legitimate use cases for customers using these sort of mixing services that could be affected by this decision?
I mean, my view is that as we sort of do more and more transacting on an entirely open financial system, there are going to be legitimate reasons why people want to anonymize transactions, right? You don't want someone looking at every credit card transaction you've ever done. That said, I think that what the government is saying here, what OFAC and what Treasury is saying is, look, if you are going to operate a service like this, even if there is legitimate activity, you need to have controls in place, whether that means sanction screening or other types of compliance tools to stop bad actors from taking advantage of this sort of ability to anonymize or obfuscate the flow of funds. So I think there are absolutely legitimate reasons, but unfortunately, these types of services have become a go-to for cyber criminals.
So how will this decision affect some of those potentially legitimate use cases? How will average customers be affected here?
It's interesting. I mean, Treasury's been sort of previewing this for some time. You saw in May, they designated a much smaller cryptocurrency mixer called Blender.io, also for facilitating money laundering by North Korea. You've seen the US Department of Justice go after what I'd call sort of dark net advertising mixing services, mixers that conspired with dark net markets to launder funds. But this is really sort of the first large designation against a mixing service that there are sort of legitimate activity flowing through. And I think what OFAC is saying, and look, I mean, I was a prosecutor for many years, and they told you could never send a message, that you can never say that to a jury. Well, regulators do just that. They send messages. And what OFAC is doing here is sending a message to other mixing services that, hey, look, if you are going to exist, if you're not going to be sanctioned, then you're going to have compliance controls in place to stop North Korea from stopping other cyber criminals.
So, Ari, big picture in your mind, is this the start of potentially a more aggressive move by the U.S. against other mixer services out there?
I think what we've seen is sort of a very targeted approach to date. And obviously, this is sort of the most aggressive, most forward-leaning from Treasury or regulators. But we have seen them sort of go after what I'd call sort of the illicit underbelly of really the growing and overwhelmingly licit crypto economy. They go after these darknet mixing services that I mentioned, right? They now go after Tornado Cash, where North Korea has sent almost $1 billion through over the last a couple of years. They've gone after non-compliant exchanges that allow ransomware and other types of activity. So really what you see here, they've gone after darknet markets. So it's still a targeted approach, but I definitely would say this is sort of the most forward-leaning of that targeted approach.
Ari, is this type of action by the Treasury Department cracking down on mixing services, is this a good thing for the industry? Does it make it a little bit more legitimate and more compliant in the eyes of regulators?
I think so. And I think as long as these actions by OFAC, by Treasury and others remain sort of that targeted view of very specific parts of really the overwhelmingly licit crypto economy. I mean, at TRM, we're a compliance solution that works with major cryptocurrency businesses that have robust compliance controls in place, that have protections against this type of activity. So I think the bottom line is overall, it's so critical to build that trust layer right now, because look, if I put my funds in a service and I believe that there's a good chance that they're going to be hacked or stolen, I'm not going to put them in that service. And that's bad for sort of the overall crypto economy. So I think sort of taking actors in the space like Tornado Cash that facilitate money laundering out can potentially allow sort of the growth and I think flourishing that you're describing sort of with that question.
Okay, that's all for today, but we'll be back again tomorrow with a lot more. We'll see you then.